Hi guys, good morning. It's Tuesday 29th of January, just gone 8:30 here in London. We'll start by having a quick look over how we finished yesterday in the markets, what happened overnight, stories driving the market, and then we'll talk about the main event, or what should be the main event for today, with the voting of the amendments. So that will come shortly. Just having a quick look over how we've come to where we're trading now in the markets. You can see my bottom right chart was really the main mover yesterday for, well, certainly for commodity prices. Oil having quite a big down day, stopping on quite a key technical level. We found support not long ago on the 17th of Jan, and was also, well, the third test of a trend line, and the bounce we've had since then has been well, really strong. However, the previous low that we had yesterday has offered a good level of resistance. The market's pricing this in as due to sort of the subdued risk sentiment, and also there was a reopening of a Libyan port as well. So this is one of the reasons sort of talked about for while oil came down, and really was a strong day. Just having a quick look back at that chart, you can see trading 53.5 and above to begin with, all the way down to 51.29, or just a bit above that. Let's call that 51.34 for that low. So a big day yesterday for oil, slight recovery, and that would, as usual, weigh on equities slightly. However, the main sort of talking point going into the afternoon session, as oil was also going down, was the earnings from Caterpillar. So just putting that into picture now, you can see, well, one of the most striking things there, fell 9.13%, losing $12.49 per share, missing disappointing earnings there as well, citing the China slowdown as well. And this had an impact on all US equity markets. You can see, if I just change the middle three here, you've got the Dow Jones on the left, which you can see really until sort of 5:30 was coming down quite strongly. Obviously they're making a new low for the week, and the Nasdaq the same, and S&P, you guessed it, the same, before a slight recovery into the back end of the session, as oil also did so. So just a reminder of how good that correlation can be. We'll have a look at the calendar in a moment. Obviously good week for earnings. I feel, you know, while maybe the first sort of few weeks of January have been slightly quiet in some respects, it does feel like it's about to jump to life today. Even though yesterday was a relatively quiet day in the markets, it was really move-wise all about oil and the Nasdaq. The oil moved lower. Unsurprisingly, you also had the Canadian dollar weaken, so I'm just bringing that into picture here, and you can see yesterday afternoon and morning, until oil did recover, the Canadian dollar was losing quite a lot of ground against the dollar CAD there. So another good correlation to keep an eye on, whether we would see a continuation of yesterday's move in oil, or actually that was all priced in, and we look elsewhere with the APIs tonight and DOEs tomorrow as well. So just having a quick look at how we finished across the board on the S&P here. You can see I've got the map of the S&P 500, a lot of red on the screen. So while we've had a decent recovery since Boxing Day, it does sort of feel a bit toppy, but with the earnings coming out, I think the impact that you saw from those Caterpillar earnings yesterday just shows how topsy-turvy it could well be. Obviously Facebook the main one today, and you've got Amazon for example later in the week, which could see moves of similar significance either direction. So wouldn't be looking to hold too many positions for a longer period of time this week going forward. Obviously the main event today, the one that everyone's talking about, is the amplified 10-year anniversary, but other than that, we have the Brexit guide to the amendments votes that are coming out. So the key times to be aware of for your calendars, I'm sure you've all got your notepads in front of you. The sort of the kick-off time today, got written down here, will be around 12:45. That starts as MPs begin their debate on Theresa May's neutral motion, to which MPs have been tabling their amendments. So while there is 14 amendments, doesn't of course mean that all of those will get voted through. That comes down to the Speaker, John Bercow, about which ones decides to put through for the vote, which will happen around 7 p.m. tonight. So we'll run through the sort of the most likely amendments that will get voted, and a couple of reactions to where price could go. Obviously the pound this morning has already been made a new low down to S1 and is currently trading back on that pivot. Actually, if we just have a quick look over at how we are trading, the dollar slightly weaker this morning, actually making a new low for the week. So we'll have a quick interrupt just to have a look at a couple of those dollar pairs. The pound coming to an interesting level after breaking that trend line yesterday. You can see a retest of that would be anywhere around now 132. The pivot and the trend line all coming in to play there. Euro dollar quite dramatically recovering following the ECB last week, is now at another key level of resistance as well, with the R1, and also some levels not seen since the middle of January. Gold as well. You see Michael was long this morning, and having broken above 1300 yesterday and Friday, we continue to push on. So worth keeping an eye on anyone in dollar related positions, and we're seeing a bit more weakness come into play, and this in turn is helping S&P push higher and might push oil on a bit further as well. But going back to the amendments, so 12:45 and 7 o'clock, the main areas to be aware of. So as mentioned, John Bercow will select those. One amendment would be selected for 90 minutes of debate. However, it's expected that the government will allow time for MPs to discuss more options. So just having a quick look, and to keep it as simple as possible here, you've almost got it coming down to this one here. You've got the Cooper-Bowles amendment, which would be more of a delay of Article 50. Of course, this doesn't necessarily mean that Europe are even going to accept it, but this is the amendment that they would put through. This would be pound positive, and you know, we would certainly expect us to break the high of the year. Any backstop changes, and this is where you're looking at more at Brady's amendment, this would be pound negative, and we would see us drift down. I would say there's more risk right now to the downside. I think we've had a strong start to the year for the pound, albeit you know you have got the weaker dollar as well. But this would be a bit of a surprise, as you know where we're currently trading. Again, let's just bring that into picture. A lot of this is priced in. If we have a look at even just putting this on a longer time frame, going back to the beginning of January. Let me just remove all the pivots. You can see here low of the year at 125. We've had a pretty one-way move all the way up to 132. The largest red candle you see here was the meaningful vote on the 15th, and the no confidence vote the next day, completely dismissed, and we're pushing higher. So a lot of that has been priced in, the delay of this no deal, but tonight might well prove that to be true and confirmed, and Article 50 does well get, or supposedly could get, delayed if you were to agree with that. So I'll keep it down to simple terms in looking for a reaction to those charts there. Also on Twitter, which is pretty helpful, Viraj Patel, which I know a few of you do follow, has gone through a couple of the options of these amendments here. So you've got Breathe, which we'll come on to. This is more sort of a softer Brexit second referendum possibility, and this again would be seen as pound positive, and I think you could see quite a push higher. Chances of this going through sort of tabled around sort of 50-50, sort of tight if that was to happen. The Cooper, which we just talked about, the no deal off the table, and the delay of Article 50 extension of that, this would be seen as the sort of the biggest win. And I would say, if I was a betting man, which I am, that I would suggest this would be the most likely. I think, as we'll come on to in a couple of moments, this would probably be seen as a big blow for Theresa May. Obviously this Labour backed amendment, or majority backed amendment, and it would be sort of seen as a sword in the back, and we would you know, albeit push higher, you know, how much longer could May go on with that? So a couple of key amendments there. Obviously not all 14 are put down, but just in terms of direction that these markets could go is definitely one to keep an eye on and have a look at that. Also, for those that do have the FT, you've got the key amendments here, which I think is, you know, very helpful. Just a quick summary of what those would be. So if we just have a quick look over at that Viraj Patel one, I'm going to go through the top three, which are the most talked about. So the Grieve, Cooper and Brady amendments, if they were to even get put up for vote. Of course, you know, John Bercow may well not choose any of those, but those are the most talked about and perhaps suggested to go through come 7 p.m. tonight UK time. So just having a quick scroll down here, if we go down to the Brady one to begin with, this was, as you saw in the last one, seen as the sort of the pound negative one. This is looking at the sort of replacement of the backstop, alternative arrangements to avoid a hard border. As you can see here through the FT, they've got the chances of this going through. Will the amendment be approved? And here the FT have said that if it was to be voted on, almost certainly not. Also, sort of a sub note on this. There, let me see where it says Brady hasn't even mentioned what the replacement of that backstop would be. So I think the idea of this not being voted through is quite likely to, you know, that it will not. The amendment not really suggesting the future plans for that. So that would almost be your, you know, sell at market, sell the pound at market scenario if that was to come through. However, I think there'd be a bit of a chatter if that did come 7 o'clock, that you would see a big move come into play for the pound. And just having a look back at the chart, I could see us getting down to 127 quite quickly. That the low that we had on the meaningful vote day on the 15th of Jan, I think that would be one that could come quite quickly there from a fundamental and technical point of view. Moving back, having a quick look down the Cooper. This is sort of Labour backed, and this would, you know, if it was up to me from a personal point of view, I think this is the one that I would expect to happen the most. This is sort of taking the no deal off the table. This is requesting, keyword requesting, an extension of Article 50. Obviously the EU would also have to agree to that. Whether they would want to or not is up for debate. There's been comments recently that have suggested that it might, but of course overnight and previous days as well, there's been some saying that they don't want to keep it dragging on and so on. So this would be positive for sure. But it could well be that it turns out to be a short-term positive as the EU then reject that. But you know, come the sort of the 29th, you know, no one's going to necessarily both want a no deal on that. Again, this, if it was to be voted through, you know, not necessarily saying it's even going to be put up for that vote, it's seen at the moment to be on a sort of a knife edge. I think today it's worth noting that there's likely going to be a lot of chatter. We've already had a couple of comments that have come out today, so looking out for that. You know, I don't imagine that the pound is going to be in a choppy sort of sideways move. I think there will be spikes higher and lower from that. Oh yeah, Will, I've just seen your question about that longer term downtrend in the pound, so I'll come on to that towards the end, and we'll have a look at the charts from a technical point of view, as that definitely is quite interesting. Looking at the sort of the decent room to rally from the upside, I completely agree. Last couple of just going back to that that point we'll come on to later, but yeah, the technical break of that I think holds significant weighting here. From a sentiment point of view, and I do actually continue to favour the upside. Of course, look, one thing comes out, and if the unlikelihood of Brady's amendment getting voted through, we'll be below that downtrend, I think, very quickly. So yeah, one to definitely have marked up on the chart, and as a guide from sentiment, whether to prefer the long or the short, I think is a good way to go about it. The third one I want to mention, obviously, as said, there's 14. To go through all of those would take quite some time, and just flicking back to the pound article, it actually does go through those different amendments, and please do have a quick look at that. But these are the main sort of talked ones going through here. So Grieve, this is again sort of seen as if it was to be voted through, to be tight as well. This is more looking for alternatives to the withdrawal agreements, such as a so-called Norway Plus proposal. For the UK to be in the EU single market and customs union, and the key thing here is that second Brexit referendum, which, to be honest, I think would be the same scenario as we're in now, but one to bear in mind. Those would be the sort of the main three to focus on. I think if we were to have the Cooper one that gets pushed through, you're going to have the chatter continue about Theresa May. Here you've got the article sort of running through. May faces losing control over Brexit despite gamble on backstop. So this is the sort of having a read through of this article, sort of reiterating the fact of, or sort of that Labour-backed sort of amendment, which would sort of be sort of seen as a humiliating loss for Theresa May. So there's it wouldn't be surprising to see another no confidence vote, perhaps headlined by Jeremy Corbyn, if that was the case, and that's more political uncertainty, and actually we could then start to perhaps come a bit lower again for the pound there. So definitely going to be an interesting sort of afternoon, 12:45, 7 p.m, your key times to be aware of, and then some unscheduled comments that will come out, no doubt, as well. You've actually also in the mix there, you've got Bank of England's Haldane speaking at I think 5:30. We'll come on to look at the Canada shortly, but another one to bear in mind going forward as well. Mentioning on the one that I think most popular, or most likely I should say, the Cooper amendment. If that was to see the delay, it's not to say that it's definitely going to happen. There's some EU states are weighing conditions for Brexit extension. Do they want to keep this dragging on? I mean, if that was the yes or no question, do we want to see Brexit drag on? No one's going to say yes. So it's an interesting one. If that was to get put forward, would they actually accept the extension? I personally think they would. I think no one does want that no deal. And some comments even overnight, I think, from the Lithuanian president saying that it'll probably be helpful if they were to see postponement of Article 50, but the longer we will drag both sides in the process, the more damage we will make. So that is for sure. But I think longer term, if we can get this deal as good as possible for both sides, does it matter too much about how long it delays? Yes, short term. Longer term, not really, in my eyes. Elsewhere, looking at sort of headlines from overnight, it was quite interesting to come in and see this one here. Well, not this one, that's the one I'm going to come on to. Yeah, US Mnuchin expects progress in complicated China trade talks. So this positive headline, and looking at the chart, and we'll go S&P for sort of the guide of this, and bringing up that low that you see bottom right, Boxing Day low. We've continued to sort of rally. We have stalled, consolidated a bit near some very important technical points, currently up 13.8% from that low. Looking at where we are now to the high, is that 11.6%? Incredibly, doesn't seem that much really, does it? But yeah, so he's got a bit of room to play with, Trump, and I mentioned this a couple of times, and until 1st of March, which is still time away in the markets and everything can happen, I think he will go down the route of playing a bit of a harder ball. This week I think will probably be dominated S&P move wise by earnings anyway. But it'd be interesting to see how these sort of comments come out trade related. But this would be seen as a bit of a positive. But if you had just seen the other screen that I had shared there, US unveils criminal charges against Huawei. So yeah, one good headline, one negative, and that sort of cancels each other out. And to be honest, while I do see all-time highs in equities a couple of months, I do honestly believe that we've got a couple of hurdles in the way. Most importantly, the 12th of December high. I think that's an absolutely massive level. You've also got a moving average that comes around there, and then you've got the Fibonacci level from that high to the low. Let's just put that on for reference. Just roughly drawing that, the 6.18, and then above that you've got a key trend line. So there are absolutely some key levels in the way. I do see us getting through, but short term, importantly, maybe over the next sort of couple of weeks, I can see us drifting a bit lower, which will again be quite interesting from a trade or intraday perspective as well, opportunity wise. Again, retest of that trend channel yesterday provided very good support. So if you are looking for a more medium term position to go short, which I'm not necessarily going to be buying right now, I would actually be interested to see us close below here, and then how we can actually potentially even drift lower. So that's trading for you with the different possibilities there. With earnings coming out, one to keep an eye on today will be the main component from the DAX. Let me just bring up that article, which I think must be on the other one here. Yeah, so SAP sets restructuring after missing 2018 revenue profit goals. So just having a look at the DAX this morning, which initially was pushing lower quite significantly. So the recent recovery in stocks and in the weakness in the dollar as well, helping that recovery in oil. Safe havens is actually coming off a tad. The yen actually now near its sort of low of the day against the dollar, but initially on the open the DAX was under pressure, making a new low for the week there. So keep an eye on SAP. Obviously the main component of the DAX is just shown here from our trusty friends at Wikipedia. If I just scroll down there, I just have to move it across slightly. Index weighting above the Siemens and Bayer there as well. So keep an eye on how that goes and how that could shape obviously the stock markets today. Interestingly, well, actually let's have a quick look over at the earnings for the week as a whole. I'll just transition my chart there. The main one that we've got, Wednesday after close, you've got Facebook, which will be quite interesting. After close today, you've got Apple as well. 3M before the open, so keep an eye on the Dow Jones this afternoon. What we saw with Caterpillar before the open yesterday was the direction until about 5:30. So keeping an eye on that as it comes out. Also this week you've got Microsoft, you've got Amazon, so some exciting opportunities into the sort of the close of the sessions. 9 p.m. usually when Facebook and Amazon have come out UK time this week, so you wouldn't want to necessarily be holding positions overnight or after sessions. It's going to be probably a choppy week, and how we sort of finish, how we close Friday will be massively important for shorter term direction. The Facebook earnings, there's quite a good article that is on the 5 things to watch when Facebook reports their fourth quarter results. We'll have a quick run through of this tomorrow, as obviously that comes closer for Wednesday. We have some interesting earnings, let's just put it this week, and I do think from a trade opportunity perspective, those waiting patiently for those to come out will be the way to go. Also this morning in sentiment wise, we were coming low, and Royal Mail was down quite significantly. So equities as a whole were under quite significant pressure. They've almost just turned on a knife edge recently. Euro stocks back up to its high of the day. The DAX has recovered most of its down move, and the S&P also near the pivot of today, where we had key resistance yesterday. So yeah, interesting day for other markets than your pound related assets as well. Having a look at the calendar, just to wrap the sort of headlines off if you like, before we look more technically, just zooming in on that main thing to be aware of, data wise, scheduled data wise. 3 o'clock you have the consumer confidence from January, 124 expected, which is a downtick from that previous number. Again, worth keeping an eye on, not necessarily want to hold any dollar positions over that. And then you have the oil API back to its usual Tuesday 9:30 following the Martin Luther King Jr. Day last Monday, so that was all pushed back a day. That's back in its usual slot at 9:30, so one to keep an eye on for oil traders heading into tomorrow's session. 5:30 you got Haldane's speaking as well, so you know, in the mix of everything going on with the pound, just something to be aware of and keep an eye on. But the key times today, 12:45 and then 7 p.m. is when it's going to get most interesting, or it should do anyway. Having a quick look over at the charts, how we're trading from that technical point of view, just bringing oil as yesterday, you know, was really interesting to see. I actually had this trend line drawn on about 10-15 minutes before, and it hit it absolutely perfectly, linked in with that low that we had back on the 17th. You can see the retest of this trend line, which I think Anthony had on previously, along with yesterday's low, is really containing price action there. So both levels of interest that I would have on. A break of that and 52.50, it wouldn't be a surprise to see us get to 52.88 and 53 very quickly for oil. Having a look at the pound, and just going to take the pivots off and look at this on a more longer term perspective. Just going to have this sort of weekly look on as well. Just put it on a daily. So having a look at the trend line that we broke through here, this is quite an interesting one. Also, another one that I would have on still is going from the 26th of September. So these trend lines, where the breaks and closes above would be obviously very significant to remain that way. Today the votes obviously could influence price pretty quickly, but I do short term feel that we are going to continue to push on, and as a short term target just below 135 I can see happening in the short term, and potentially even by the end of the week, to be honest. Elsewhere, the dollar, as mentioned, was slightly weaker this morning. You've just seen a bit of a profit take across the board. Euro on that R1 first test, very strong. Gold on the R2, again an area where people have looked to have taken profit. Just having a look at US equities, which, as I mentioned, perhaps being patient today is the way to go, but from a technical sort of resistance area, the pivot, the low from the high from yesterday evening as well, looks to be quite interesting. Obviously we'll be on the mic throughout the day, commenting on what could be one of the sort of the best days market opportunity wise for the pound. But any questions, as usual, please do get them in the chat throughout the day as well, and if not, I hope you all have a good trading day.